Korea's central bank on Thursday released advanced data that confirmed continued economic growth. The GDP grew 0.6% from the previous quarter, putting the government's 3% annual growth target within reach. To help us digest all of this, we have our economics correspondent Kim Jun-hong in the studio. Welcome, Jun-hong.
Thanks for having me, Eugene.
Great to have you here. So, Jun-hong, many had expected that the Middle East conflict to leave a bigger mark on the second quarter, but based on this data, that doesn't seem to have happened.
Right. So Thursday's figures defied those concerns, and as widely expected, that's all thanks to semiconductors. Strong chip exports, along with limited impact of the Middle East conflict, helped keep the growth on track, while policy support also added momentum. The reading beat the Bank of Korea's May forecast by 0.4 percentage points. Although the pace slowed from the first quarter's 1.8% pace, the central bank said the economy continues to show solid growth momentum. It noted that growth typically weakens sharply after a strong quarter, but this time the economy defied that pattern. Private spending rose 0.4%, while government spending increased 0.2%. Facilities investment also increased on stronger demand for chip-making equipment, but construction investment fell. And growth in exports outpaced that of imports. Domestic demand and net exports each contributed 0.3 percentage points to growth. The central bank said the two made balanced contributions to the expansion.
Many had expected second quarter growth to rely largely on exports, but domestic demand and net exports contributed in equal measure, while private consumption and facilities investment continued to strengthen.
Real gross domestic income, or GDI, far outpaced GDP growth of 15.6% on year in the second quarter. This marked the fastest pace in 38 years, with stronger chip export prices boosting the terms of trade.
So the numbers look certainly encouraging. So if this trend continues, will Korea be able to reach the government's annual growth target of 3%?
Well, for now, it certainly seems possible. But first, here's how major institutions see Korea's economic growth this year. The latest forecasts are clustered between 2.5% and 2.6%. The OECD made a particularly sharp revision this month, raising its outlook from 1.7% to 2.6%. And the central bank also hinted that an upgrade could come in its next economic forecast in August.
Even if quarterly growth averages around minus 0.1% in the third and fourth quarters, annual growth could still reach 3%. That's because growth in the first half of the year came in much stronger than expected.
If growth reaches 3% this year, it would mark the strongest annual expansion in 5 years. That also matches the government's latest outlook after it raised its forecast from 2% to 3% last week. The Finance Ministry said today's strong second quarter data has improved the chances of meeting that target.
And last but not least, tell us about the key factors we should be watching behind this optimistic outlook.
Well, externally, renewed tensions in the Middle East and U.S. tariffs still lie as key downside risks. Experts are also watching whether domestic demand, particularly consumer spending, can recover. Private spending in the second quarter remained positive, yet the pace remains slow compared with past recoveries. That's because growth has been driven largely by semiconductors, which experts say generate only limited multiplier effects across the broader economy.
The semiconductor industry has a relatively limited impact on consumption and job creation. Since it's capital intensive, it creates fewer jobs, so the benefits are shared by a smaller group of people. It also has relatively weak linkages with other industries, which limits spillover effects in the economy.
Another challenge is the economy's reliance on a single growth engine. Broader spillover into weaker industries will be key to more balanced growth. As for the longer-term outlook, much will depend on the sustainability of the chip cycle.
The key question is whether global demand for chips can be maintained or even grow further. The best indicator will be the AI data center investment plans of major U.S. tech companies, both the scale of those investments and whether they can be sustained.
Our economics correspondent Kim Jun-hong, thank you for coming in tonight.
Thank you.